Today is Monday, December 4th, and this is the ADM Investor Services Monday Market Kickoff. Please note that the views and opinions expressed here today are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or Archer Daniels Midland Company. Today's guests are Steve Freed, Vice President of Grain Research at ADM Investor Services, and Alan Bush, ADMIS's Senior Financial Economist. Steve, let's talk about soybeans. The beans have traded above resistance. What's going on in this market, and do you think prices can keep going higher?
It's a weather market. Argentina is drying out. They're not getting the normal amount of precip. And some people think, at least for the corn, December 10th is a critical day in which after that day, if they don't get rain, yields will start to come down. And so it's the same kind of condition for the beans. They're not getting a good start. So the market's putting a little weather premium back into Argentina. Now we're back to near some pretty important resistance level at 1020 on the March beans. We actually need a problem to push above these price levels. In talking to the commercials in Argentina, they feel that it's too early to be concerned, but in La Nina years, Argentina tends to stay drier than normal through their summer.
Let's talk about corn for a minute. The corn market, corn futures made a double bottom on the charts. Do you think this signals a rally in the corn market to come? Or should U.S. farmers be selling this rally? Or is there a price level they should be looking for?
Well, I think that the 360 area on the March is pretty strong resistance. We've already backed away from that price today. And I think that on one hand, you've got concern about the Argentina corn crop, but there's a lot of corn here in the United States the farmers still have left to sell. They probably have a record amount that they still have to sell from last year's crop. And so it's going to be a struggle to move much higher. We saw one consultant today said that on a 10-cent rally, to sell more 17 corn, add to 18 corn, and even start selling 19 corn.
Steve, over the weekend, a lot of tax talk as the tax reform bill looks like it's going to get passed. What does the tax reform bill mean to commodities in general?
It's kind of interesting in that a few people that would try to put together some kind of outlook based on that has said that what they're focusing on is the increase in debt. The $1 trillion that this could cause, and that could actually be a negative to the dollar eventually, which some fund managers are looking as positive to commodities.
Steve, 1 week from tomorrow we have another USDA report. Is the market looking for any significant change in this report?
We have a pretty big spread in corn carryout for 17 and 18 between a little above 2.3 to a little above 2.5 billion bushels. That's a big spread, and I think a lot of it has to do with what people think the final ethanol demand is going to be with the new mandates and things like that. We're watching pretty closely because this week President Trump is going to meet with some of the oil refiners, and because of the cost, the ethanol is raising their cost, but no one expects any changes in the mandates. On the beans, everyone's got a higher carryout, and it's mostly because of export. But we doubt if the USDA changes them until they know more about the South American weather.
Let's look at the financials for a minute. A lot of buzz in the room the last couple of weeks about Bitcoin futures. How about an update for our viewers?
Well, absolutely. There's a tremendous amount of increase in the new Bitcoin contract. It is scheduled to launch on December 18th. It is a contract that contains 5 Bitcoins, and it will be cash settled. And of course, the cash settled feature has been very successful in the stock index futures contract.
U.S. dollar gained some ground after the U.S. Senate passed the tax bill this weekend, boosting expectations for a faster pace of rate increases from the Federal Reserve. Is today's advance the beginning of a new leg up for the greenback?
I believe it is not. The dollar's somewhat better today on the idea that a stronger economy could result as progress is made on tax reform. But Steve is right. In the long run, there could be some negative consequences to the dollar as far as the potential for a deficit. Also, the dollar index has underperformed the news as of late, so that is somewhat of a sign of weakness. Also, interest rate differentials now tending to be not quite as advantageous to the dollar as they were for the most part last year.
Let's talk about the stock market today. Market off to a roaring start on a Monday morning here. S&P and 500 and Dow futures both advanced to record highs after early Saturday morning passing of the $1.4 trillion package. What is the outlook for stock index futures now?
Well, nothing has changed at all. Interest rates are still low enough globally to sustain the bull market in the equities futures, not just here in the U.S. but around the world. So I believe every break should be used as a buying opportunity, and I anticipate further gains through the balance of this year and follow through strength well into 2018.
Anything to talk about in the gold and precious metals markets?
Well, in the precious metals, inflation is with us. It seems to be somewhat slower than some analysts had anticipated. I'm believing that the next big move in the gold market will be to the upside as ultimately inflation becomes an issue again.
Just to add that two consultants came just back from China last week, and they said, number one, their economy is booming. Number two, it looks like that economy is going to increase the demand for certain commodities. So watch the copper market. If their economy does boom, copper should go higher.
Steve, you mentioned China. One thing we talked about a few weeks ago was the fact that China may start using a lot more ethanol. Do you think that's still a good possibility, and will that have a positive impact on U.S. corn?
These consultants came back and said that this is going to take time, but China will become a net importer of corn down the road.
Which is good for the U.S. farmer.
Which is good for the U.S. farmer.
Remember, the views and opinions expressed today on this video are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or Archer Daniels Midland Company. If you'd like more information about our brokerage services, we'd like to speak to one of our experts about managing your risks, or would like to open a trading account, please visit www.admis.com.